Welcome back. You're watching Commodity Champions, and fears of falling demand in the face of weak manufacturing data has caused crude prices to cool off below the $100 barrel mark. Like the rest of the commodity markets, oil prices have been volatile as investors weigh tight global supplies with fear of a potential global recession. Slow Chinese production has only compounded market fears as COVID restrictions stifle manufacturing. The drop also comes ahead of a meeting on Wednesday between members of OPEC Plus to decide on September output. So what lies ahead for crude, and will the volatility persist? We have with us Peter McGuire, CEO of Exim Australia, with all those answers. Peter, hi. I know what Guy said. It's very difficult to predict what all has happened in this year already, and difficult even to predict on what OPEC and allies will do after the month of September. But that really is top of the mind because the OPEC and allies agreement expires in September. What are we looking forward to?
Well, Manisha, I think there's just so many different moving parts to the whole equation. You're looking at retail sales slumping when you're thinking of what we experienced in Germany. You're looking at what's happening as far as US, where we are across Asia. So as they move forward and what they're looking at as far as numbers, I think they've got to see where inflation runs for this month and looking at the status quo as far as demand destruction, or are we going to see any wild cards enter the market over the next, 4 to 6 weeks. So, I'm looking at output, what OPEC's prepared to do. You got July output up, but falls 1.3 million barrels a day. I think that we're just going to keep hands on wheel, and it's very, very difficult to forecast what they're going to do in 6 weeks' time.
Clearly. Also, Peter, the supply side concerns really seem to be easing because we are looking at OPEC producing more, as much as they can because they are near capacity, as many reports have suggested. The Libya output also seems to be stabilizing right now. Would you say that we've moved on to demand concerns more than what supply seems to be doing?
I think so in a lot of ways, Manisha, because, we've had a very tumultuous 7 months of the year so far, and what we've experienced from price and the volatility and whipsawing. So, yes, at the moment, I'm looking to see what happens as far as the consumer out there, where they are on Main Street and what the appetite's going to be over the next couple of months. Inflation galloping away, interest rates rising, and the overall theme of how much ammunition the retail sector has to continue, their addiction to crude oil and consumption. And that seems to be the major concern that I'm hearing across the planet is, many, many people are saying, well, I'll take public transport or I'll wind back my use quite simply because of the cost.
Peter, would you say that, the other side is that the trade can't make up their mind on where they see crude prices because it gets bought below 100, it gets sold above 100?
Well, exactly. If you're looking over the last month, it's been a fantastic month for Brent, for an example, Manisha. We've been at 113, 114, down to 99, and quite violent whipsaws, $5 and $6 moves. And later last week, it was a fair bit higher than what it is right now. So, yes, it's had quite a steady sell-off. Also, you're looking at that US dollar. What's happening there? We've gone from 108.50 to 105.50. So that's been quite an extensive runoff. You've had big pullback as far as the yen. Have a look what's happened as far as pound and euro. So you've got to take on board, what's happening. I looked at the 10-year. That's had a big wipeout. So, it's very volatile when you're looking at currency rates and certainly what's happening with interest rates.
And the kind of volatility that we seem to be living with. Crude prices is one. We look at 5, 7, 8% of a move in one day. But natural gas has even more bigger volatility, a 10 to 12 to 15% in a day. How does one live with that?
Well, Manisha, that's always been the wild bronco. If you want excitement, go trade the nat gas market out of NYMEX, because I tell you what, you got to hold on tight. The way it was going, I really thought that we would have seen, $9.50, and it got to about $9, I think, and then it certainly pulled back from there. But we're a long way from finish line because, quite simply, you've got starting at really as the start of August. I always, put that line in the sand as far as hurricane season, and as it ratchets up from this time moving forward, you start to get to the latter part of August and into September, you can really have a procession of hurricanes. So, we've got that wild card, which is Mother Nature, that everyone's fearful of, and what impact that can have naturally to markets like nat gas and certainly to the energy markets.
So amidst all of this, what's your sense on what is the range that you are putting in for crude oil prices for, let's say, this quarter, for rest of this year? Because I understand that it's traders' frenzy, but for consuming countries, even exporting countries for that matter, what is the range that they could be looking for?
Well, if I'm looking, let's use Brent as a benchmark. I think you're going to be a 95 to say 110. There's got to be a range, unless you see something dramatic happen from a geopolitical, because we've had that pullback as far as US dollar. And I'm worried about the demand destruction. I'm worried about, ratcheting up of interest rates and the inflation story. So I'm going to say, 95 to 110. But if you have a couple of wild cards thrown into the pack, weather outages, geopolitical concerns, what's happening as far as Taiwan at the moment and Pelosi and what's, China, that seems to be gaining a lot of headlines. So, yeah, and the Russia-Ukraine situation hasn't been put to bed. So, they're big wild cards, Manisha, that can really impact price significantly in the short run. So, in a perfect world, 95 to 110, like to see cheaper for consumers, but I won't be surprised what can happen.
All right. And how would you also look at the gas prices? Because there are way more higher concerns when you look at gas, especially with what's happening here in Europe and the kind of price moves that we've seen also in US.
Well, exactly. I mean, if you're looking at that nat gas, I'm just looking here on the market. It's been absolutely spanked down from those highs that we experienced a couple of weeks back. And you're now sitting at, $8. It could be $7.50 or it could be $9.20 all within a couple of days. If you have weather outages, you have big issues as far as what's going on with the Russia situation leading into the winter. Later in the year, I think it could be a very, very important market to look at and look at closely how the nat gas market's going to be traded globally. I won't be surprised to see $10 or $11 on there unless, Europe can come to some sort of agreement with Russia as far as what they're going to do to heat the nation.
Clearly. I have one last question, Peter, and a lot of banks and brokerages globally seem to be putting to the fact that by the end of this year, we could be looking at some stability, even lower prices. I mean, 85 and around that is what various reports suggest that we will see prices by the end of this year. What changes by the end of this year? I mean, are you looking at more demand destruction? Are you looking at higher supplies? What changes?
Well, I think it'll be demand destruction be the first part, and there's that. And if that's managed and managed effectively, and in the sense of it ratchets up and it gets more crucial, then I'm sure that that's going to, drag prices lower, Manisha. So that seems to be, I think, the major concern. Retail sales, consumption, Main Street hurt from high inflation.
Well, yes, a lot of uncertainty is still out there, but at least we have a range right now to work with. If not, nothing gets thrown into that fire yet again that fuels it even further. So 95 to 110. And well, yes, gas could be something that could even see higher prices from here on. Peter, thank you as always. Appreciate your time. Thank you for joining us and trying to make sense of all of that's happening in the energy markets. But with that, it's a wrap on this edition of Commodity Champions. Thank you for watching.